We're going to dive into Crypto 101 right now, and we'll talk about the rise of cryptocurrency, what it means for philanthropy this year, and we'll try to keep it sort of relatively clear and basic on the what is cryptocurrency, and then we'll go to much greater degree on what it means for philanthropy, right? So if you want to get more and more research on understanding Bitcoin, understanding cryptocurrency, we'll do a brief overview. There are plenty of really good resources on the internet for understanding it. There are very, very few resources for understanding how it pertains to philanthropy. So we'll dive in here, but just excited to be here with you. Some of you, by the way, will know this, but we'll send the recording and the slides to you after the fact. So if you want to furiously take notes, because that's how you learn, go for it. And if not, it's okay to sit back and take it all in. We'll send all this to you after the fact. You can also share it with colleagues or others who might have missed it. Great, so a quick agenda for today. We'll do some basic intros, talk about how your week is going. We'll do a light touch on understanding cryptocurrency, as I just mentioned. We'll really walk through what this is meaning for philanthropy and how it's beginning to shape the space. We'll talk about what actionable steps you might want to take right now, and then we'll do some next steps in Q&A. So as I mentioned, we'll send the slides around later today. So quick introductions. Let's see, here we go. My name is Patrick. I've met many of you in person or virtually. I'm delighted to be hopefully meeting many of you more in person over the next year. I'm lucky to be the co-founder and co-CEO with my wonderful colleague, Jenny. Although right now, as some of you know, I'm solo CEOing because Jenny and her wonderful, charming husband, Pete, just had their first child, baby Mark. And so I'm looking forward to actually meeting baby Mark tomorrow for the first time. And that's really exciting. And then we get to work alongside just a wonderful group of people around the country. So team is almost 100, which is a little bit hard for me to imagine. We've raised $3.2 billion in new gifts and new bequests and stocks and other things. And just a really wonderful, lovely group of people. All right, so that's us. One thing that we'll note later, but I wanted to name it here, is we like books generally. Actually, at FreeWill, there's a policy that you can buy any book you want that's going to help you with your job and expense it. But in this case, we're going to give this book called 2030 by Mauro Guillen to 20 folks here. So what is this book? It's a great book. It looks at some of the big trends that are shaping the next decade and what it means life is likely to look at what is now 9 years from now. So it was written a year or two ago. And it's a really interesting dynamic to sort of study what are the emerging trends, both from a macroeconomic standpoint, from a demographic standpoint, from a geographical shifts, from geopolitical, from climate, and then what is that likely to result in? And I would assume that they're not getting everything right. We'll look back in 2030 and say, wow, Mauro got a couple things really wrong, but it's a really interesting sort of detective story almost, not fiction, but detective story, starting to piece together what's happening now and what that's likely to mean for the next decade. So at the end of this session, we'll drop a survey in the chat. Just make a quick note, say, yes, I love that book. And then in the survey, not in the chat itself, in the survey, you'll enter your address so we can send it to you if you're selected. All right, so we asked you how your week is going. Some really positive signs overall. Happiness continues to be the dominant emotion that people are feeling. And you can see how much that's shifted, really starting in the beginning of 2021 compared to all of 2020. And so most of you are having a much better year in terms of your emotional well-being than you were last year. And that is great news. We should be celebrating that and not easily forgetting it. Other exciting things, we've asked people how confident you are about hitting your goals this year. The average is 4.0. And so we'll be tracking this over time. And you can see that compared to June 29th, which is 2 weeks ago, and the blue here, you're starting to see more and more people shift up, right? So nobody is, some people were a 1 last week, nobody's a 1 this week, and we're moving more of the 3s into 4s. And hopefully, as we learn together, we'll be able to really continue to shift this and increase the sort of overall industry-wide confidence interval, which we'll keep tracking, and hopefully we'll find some interesting things here. We also asked folks if they're working from home, and 42% yes, and planning to stay remote, and only 31% are back full-time. So really remarkable. Some folks would have predicted a faster shift here, but we're seeing a lot of organizations and a lot of companies maintain this sort of very slow work back into the office, partly because for many people, 2020 was so successful that they realized maybe we don't need quite as much office time as we thought we did. All right, so that's us. That's you, that's me, that's the FreeWill team. Let's talk about crypto. And by the way, feel free to sort of toss in questions the whole time. There's a little Q&A function, and we're tracking that. And we'll, at the end, we'll go through some of the most popular questions and we'll answer them. So let's talk about cryptocurrencies. We'll often talk about this as crypto, mostly because cryptocurrency is a very long word, but you'll hear sort of industry jargon as crypto instead of cryptocurrency. We asked you how confident you are in your knowledge of crypto, and the basic answer is not at all, right? So 58% of you said I'm a 1, on a 1 out of 5 in terms of understanding crypto. 1%, so a handful of folks said I'm a 5. So if you're here and you're one of those 5s, feel free to pop in with any advice or thoughts you have in the chat as well. And the average is a 1.7. So when we talk about different giving vehicles, this is the lowest that we've seen in a pretty long time in terms of overall confidence. When we ask people what 3 words they would describe as they think about cryptocurrency, you see a lot of unknowns here, right? So words like fad, confused, volatile, risk, unsure, risky, fake, scary, but then also things like curious, great, gift, future, potential, opportunity, and really sort of this mix of, gosh, we don't know much about this, seems like a big thing, let's begin to figure this out together, right? So if that's how you're feeling, you can actually recognize that most of the industry is feeling exactly that way. So we'll do a little bit to demystify it. Some of these adjectives are perfectly valid, and so don't feel bad about feeling this way. All right, so what is cryptocurrency? Let's just get some shared definitions before we talk about what to do next. So cryptocurrencies are a digital or a virtual form of money, right? Like money, in many places, you can use them to buy goods and services. Like stock and real estate and other things, you can use them to invest for long-term gains. There are some of the largest cryptocurrencies are Bitcoin and Ripple and Ethereum and Litecoin. Those are some of the really big ones. But how does this work, right? So cryptocurrencies get rid of banks and middlemen because they're quote unquote decentralized, right? So there's no single issuing body that just prints crypto the way the US Mint prints American dollars. And so there's not a big shift here, right? This is very different than what we're seeing in the rest of the financial market. No single entity is in charge. There's no monetary policy. There's no Federal Reserve. Instead, a network of computers, what's called the blockchain, work together based on existing algorithms to confirm whether a transaction has occurred. Most cryptocurrencies make transactions public, right? So we know that the transactions happened, though the sender and the receiver may not be identified, right? So the transactions are public, even if each end of the transaction may not be. So let's sort of break this down a little bit more. It can be helpful to have sort of a mental model of something we're more comfortable with as we think about crypto. So let's talk about gold. So crypto, in many ways, is similar to gold. People can mine it, right? It doesn't take shovels and pickaxes. It takes a lot of computational power, right? So it has some real energy drain issues. You can also buy it, right? Once you mine it, it's mined, and then you can trade it as well. You can trade it as an asset or form of currency. It can trade across countries the way that gold can, right? In a way that US dollars probably can, but most currencies historically have not been able to. It has value because people place value on it, right? I mean, this is the same thing of gold or silver or American or Canadian dollars, right? We've all just agreed that there's value in this thing, and we're all going to pay prices for it. And in the world of dollars, we just say, okay, great, you can have goods in exchange for this thing that I now trust other people will give me goods for or services in the future. And like gold, there's a limited number of coins, right? Because of the algorithms that exist. So the value fluctuates with supply and demand, right? So historically, you've seen massive fluctuations in gold, or massive fluctuations in currencies or silver or even tulips in a very famous case. And like all that, crypto fluctuates to a pretty significant degree. So let's walk through the history. This is relatively recent, right? So 2008 is where we'll start. The domain bitcoin.org is registered by a potentially a gentleman, we don't know, Satoshi Nakamoto. This person does not really exist, right? So he's sort of the unknown creator of Bitcoin, and there's a lot of mystery surrounding the invention of Bitcoin, which is its own deep dive. We won't go into it too much, but if you ever want to go do some more research because you're curious, it's a fascinating thing. The first Bitcoin transfer of 10 Bitcoins happens in 2009. The first Bitcoin transaction happens in 2010. 2011, some other cryptocurrencies, something called Namecoin and Swiftcoin and Litecoin debut. The crypto exchange Coinbase, which many people now use to buy and sell crypto, is founded in 2012. And then in 2013, something called Dogecoin, which has gotten more in the news lately, is launched as well. In 2014, and this is a really big step, Microsoft allows people to use Bitcoin to buy games online, right? So it's one of the first major corporate actors to say, this is a legitimate thing. We're going to participate in the transactions here, as compared to just sort of thinking of this as sort of a side collector's hobby, right? Microsoft never says, yes, you can use rare art to buy video games. In 2015, new cryptocurrencies like Ethereum emerge. In 2016, more companies, including Uber and the whole country of Argentina, begin to accept Bitcoin, right? So you can see it becomes mainstream, not among everybody, but among some early adopters and some sort of tech-forward, either governments or companies. In 2017, Japan, yes, forward-thinking, but also very traditional and conservative, accepts Bitcoin as a legal payment. And in the end of 2017, the total crypto market, the market value of all cryptocurrency in the world, is worth over $500 billion by December 28th. And this is pretty significant. Roughly, the US GDP is 20 trillion. So you can see it's worth 1/40th of the US GDP by the end of 2017, right? So basically 4 years ago. In 2018, the total crypto market hits 824 billion and then crashes dramatically to 186 billion. In 2020, Bitcoin trades in the $20,000 a coin for the first time ever. In 2021, it hits an all-time high of $65,000, right? So you can see how much this growth over time happens. We'll look at a graph in a moment. And then by 2021, AT&T and Burger King and Shopify and other much sort of more and more mainstream organizations, companies begin to accept Bitcoin. But also Tesla halts purchases in Bitcoin due to mining impact on climate change, right? So there's a lot of sort of overall complexity here that we'll talk about a little bit more. There are a couple of questions, by the way, before we continue, on how crypto works, and I don't want to go too deep into it because it's pretty wonky. So there are questions. Hillary says, earlier you said that like gold, there's a limited number of coins, but in theory, could it be unlimited? Is it just companies restricting the creation for the good of the value of the crypto? The answer is no. It actually is limited, and to be honest, the full science and the mathematics of how it's limited is a little bit beyond me, and certainly my ability to clearly articulate it to you. So I'll try for 30 seconds and then feel free to look it up elsewhere. But it's largely based on a series of algorithms that allow sort of certain numbers and more computational work to come up with a new coin. And yet something like 90% of all coins that are ever possible have already been mined, right? And so there is this conversation about the impact on climate change. One of the things that's interesting is the mining takes a ton of computational power, which is why they haven't all been mined yet. But the trading takes virtually none, right? It's sort of like the same way you would trade stocks or something else. And so, yes, it has a significant impact on climate change. 90% of the impact has already happened on Bitcoin. So there's about 10% of Bitcoin yet to be mined, but most of it has been mined. And that's why you have this sort of constrained supply and demand, which is driving prices up. So it may not be a perfect answer on why it's constrained, but take my word for it that it is. And then you feel free to do a little bit more of a deep dive on why that's the case. Lloyd says, I still understand the value creation component. So Lloyd, one way to think about this is think of it the same way. Let's go back to the gold example, which is to say that we as an organization, we'll talk in a moment of why crypto is very useful as a payment mechanic. But we as a population have decided that it's valuable in the same way that we say gold is really valuable and granite isn't, right? And so granite has some use, but we're really paying cents per pound, whereas gold obviously is, I don't know what the price is right now, but I think it's $1,000 an ounce or something like that. And we've just assigned collective value, which then allows us to trade it amongst ourselves as humans. All right, so let's look at the overall price overall. So this is the growth of Bitcoin. You can see this early spike in 2018. And you think, wow, and then you can see quite a big crash. And then 2020 begins to pick back up, and a massive increase from 2020 to 2021, and then a significant crash. And yet, while it looks like you've lost a ton of value if you bought at the top in 2021, the folks that bought in 2019, even though they had twice as much money in mid 2021 or early 2021, are still looking at, in some cases, 10x or 100x, or in early cases, 1,000 or 10,000x returns on their Bitcoin. And this is really, really important. Diana asks, are there actual coins? These are not actual coins. There's no actual thing here. These are all virtual currencies. So thank you. So let's talk a little bit more about Bitcoin in 2021, right? And this will be helpful, and I think we'll answer some more of the questions. There are more than 10,000 cryptocurrencies in circulation right now, but Bitcoin has the largest market share. So the value of a Bitcoin this morning, right, and it's Tuesday, July 13th, as we, folks watching this in the future on recording, was $32,500. Bitcoin accounts for more than 50% of all of the value of all cryptocurrencies. And this is fascinating. If Bitcoin reaches $200,000 per coin, right, which would be 6 times growth, which is smaller than a lot of the growth that's happened over the last few years, half of the world's billionaires would be billionaires because of crypto, right? So the wealth here is sort of extraordinary. And it's a really interesting opportunity for lots of reasons, but also in philanthropy. So let's talk about 2021. The value of the crypto market reached more than $2.4 trillion, right? So more than 10% of all US GDP in May, just 13 years after Bitcoin was launched. 14% of the US population owns cryptocurrency. 14% is a remarkably high number and a level of adoption for so early. It's about 21 million adults in the US own some form of cryptocurrency. And another 13% say they plan to buy crypto within the next year. So you can see how quickly this is taking off. But why is it getting so popular? Why are people using this and then agreeing together that it has so much value? Well, partly there's sort of this thematic narrative. So innovation and volatility and subversiveness, this idea that banks aren't in control, that no one is sort of masterminding the whole operation, that it's something that happens collectively, is really exciting. Second thing, more practically, is that low fees, right? So the transfer of Bitcoin between accounts is incredibly low. It's far less than credit card fees. And it's very easy for crypto to pass across geographic boundaries in a way that a lot of other currencies can't move as quickly. And so this is really valuable. As a small note, if you are a nonprofit with American or European or other donors outside your country, it's a really helpful, easy way for them to transfer funds into your organization. There's no government control, so people like it in that element. And in some ways, it feels safer because it's not connected to governments, right? So when there's extreme volatility in the world, historically, people have fled into gold, right? They've sold their stocks or they've sold their T-bonds, right? Government-issued bonds, and bought gold because they think, wow, gold is going to be safe no matter what happens with what government. And some people feel that way to some degree with Bitcoin. And also profit, right? So the massive growth over the last 5 years or so, people see crypto as an investment similar to stocks. So really interesting stuff here. And that's why such a degree of ownership. We asked you all, do you yourself own crypto? Do you own some form of crypto? And 85% said no, but 15% said yes, right? So you think of this population as somewhat representative of the United States, and 15% of you all own cryptocurrency. So let's talk about cryptocurrency and philanthropy. So there's not a ton of great data here, but let's look at this. So one piece of data we have is that Fidelity's donor advised fund reports out every year how much cryptocurrency is going into the funds, right? And so presumably this all gets liquidated then, and then comes out to you all through traditional donor advised fund gifts. In 2019, $13 million went into donor advised funds. In 2020, that more than doubled. And so you can see this as a proxy for the acceleration in giving of Bitcoin and other cryptocurrencies happening across the board through this one small measure, right? So we're lucky to have this data from Fidelity. And Fidelity, by the way, is probably about 1%, 2% of all, their DAF in particular, of all philanthropy every year. And so you can think, is this 1 or 2%? Probably not. There's probably more money going into this compared to most charities. But you might think, let's multiply these numbers by 40 or 50 to get a sense of how much crypto philanthropy is happening every year, right? So we put that at $1 billion or 2 million, coming off of 500 million to $1 billion in 2019, 2020. And then what is that going to look like in 2021? Probably doubling again. So still a very small portion of overall philanthropy. And yet the acceleration on this is really important to understand. So why have donations soared? Well, first you have more people with crypto. It makes it easier for more people to give crypto. It's almost as mainstream as the stock market, which is really remarkable, which has also seen surges in new investors over the last year. So there's also this massive surge in stock giving, and some of you are farther ahead of that. But stock giving is going up to a remarkable degree, and by the way, it's considerably larger, right? So stock giving still far more important, but interesting to see the parallels here. And this huge increases in value are leading to more wealth. But also you have this interesting dynamic where crypto is going up so quickly that there's a lot more capital gains on this than with an asset that's just going up 3 or 4 or 5% every year. So why is giving crypto so good for donors? Remember that capital gains are the increase in what was paid for an asset and its current value. Capital gains taxes are just taxes on those capital gains. So when an individual sells an asset, this is the capital gains tax, and they have to pay between 15 and 20% in most cases at a federal level, and oftentimes state income taxes. So when donors give crypto to the nonprofit, instead of cash, they avoid capital gains taxes, which is really exciting for them. And they also receive a federal tax deduction for the value of the gift. So much like stock giving, which is by far the best type of giving for many, many donors, crypto has a lot of the same elements here. So why does this matter for you? When donors avoid capital gains taxes, they often transfer these savings onto the nonprofit, which is going to mean bigger gifts from the same donor. So if you're getting a crypto donation from somebody or just a cash donation, it's likely that crypto donation is going to be much larger. In this way, it's similar to giving stocks or any appreciated assets, right? We spend a lot of work helping a lot of our partners move donors from cash giving to stock giving because they get dramatically larger gifts from exactly the same people. But the people who own crypto are also a little bit different than stock donors, right? And so providing this giving option also opens up a new donor pool. So let's talk about who actually owns crypto. So the average age of a crypto owner is 38, and 77% of crypto owners are under 45. The gender, 74% of crypto owners are male, but 53% of people who are interested in buying crypto are female. And so what you're seeing is crypto started out being very, very heavily male, and each year that's going down a little bit. And you can see how big this shift is and how we're probably a few years out from rough parity in terms of gender ownership as that trend continues to go down. Ethnicity, 71% of crypto owners are white. And location, more than half live in urban areas or suburban areas. So it tends to be more urban than, say, stock ownership or other things. The wealth, the average income of someone who owns crypto is $111,000, and 69% are investors in things that are not crypto, right? But that means 31% are only invested in crypto. So let's look at a couple of these stats. So you can see the gender breakdown at the top, average age, pretty rare for folks 18 to 24 own it, and then 25 to 34, 35 to 44. So older millennials, younger Gen X, 45 to 54, pretty significant, and then all the way down to 55, 65 and over tends to be a lot less crypto friendly. So one of the things that we're seeing here is a lot of your major donors across the board are over 45, right? A lot of your major donors are over 55, a lot of them are over 65. Crypto is an interesting avenue into more millennial giving among 25 to 44-year-olds, right? And in that is included the youngest Gen Xers. I believe the oldest millennials are 40 or 41 this year. Also, where are these people? So if you think about San Francisco as the top city for crypto ownership, and it is, and use that as a baseline, basically you'd say for every 92, for every 100 people in SF that own crypto, by per capita, by the way, 92 folks in New York own it, right? 57% in LA, 48% in Chicago, 48% in Brooklyn, Seattle, San Jose, Houston, Austin, Atlanta. And then you can see a gradual shift out, right? So major urban areas that tend to draw a highly educated workforce that are tech friendly. If you are a San Francisco donor, you should be accepting crypto. Excuse me, San Francisco nonprofit, right? If you are in New York, you should probably be doing this, especially if you have some younger donors. LA, Chicago, if you are in Oklahoma City, which doesn't show up on this, you might say, okay, great, I can do this, but it's probably not a top priority for the next year and a half. And so you can think about where are my donors and how do they rate against this to think, okay, how much of a priority should we be putting on cryptocurrency? And why do people own crypto? For the most part, you see this dominant form is that people are buying and holding cryptocurrency for the long-term investment potential. So 70% of folks are going to say this. 36% are actively trading, right? The equivalent of day trading or similar. 27% use it to make purchases. 11% use it to increase the privacy of purchases. And 12% use it to make in-person purchases. This is among crypto owners, right? So what you see is that people really view this as an investable asset, right? That's the dominant thing. It is also helpful to occasionally spend it. For the most part, people are buying and holding. So for many crypto owners, this is a new source of wealth. And while younger donors may not be able to give as much in cash, many will hold a lot of wealth in cryptocurrency. So providing crypto donations as an option can help you secure more gifts from a growing segment who might not be able to give you large gifts otherwise, right? So it's a really interesting dynamic here. It's not as though you're simply replacing one gift with the other. You may be getting larger gifts from the same people from a specialized cohort. This is why more and more nonprofits are beginning to accept crypto. There are a couple, before we get into more of this, I just want to name a couple of the risks and challenges associated with crypto. One is market volatility. So let's say you want to accept crypto, you make a big effort into it, and then the market crashes by 90%, well, suddenly there's a lot less crypto to give. And so you're not going to be that successful if the cryptocurrencies crash, and these markets have proven to be extremely volatile compared to other markets, right? Now, the inverse is also true, so we don't want to be overly pessimistic here. Crypto goes up to 100,000, suddenly there's a lot more to be given. So gifts will get a lot bigger or smaller in many cases, on a day-to-day basis, which means you want to make sure that when you're accepting, you're selling immediately. There's some clear things on acceptance policies. For the most part, there are some simple things that we'll talk about to make this a lot easier. Donor anonymity happens. So in some cases, cryptocurrency shows up without a name attached to it. And then it can be hard to substantiate a gift or give tax receipts. It's obviously difficult to steward anonymous donors for all the reasons that are true in all other types of giving. And then I wouldn't stress about this, but there is increased Bitcoin usage among criminal behavior and sort of international criminals because it's harder to track, right? So do not stress about that. But we're trying to give a full picture of crypto at the moment. The last thing to know is that like any other new and growing space, and we see this with driverless cars, we see this with artificial intelligence, it's largely unregulated, right? We don't have a 100-year history of legal and sort of accounting best practices to deal with crypto. And so these regulations are likely to change relatively quickly, at least compared to other types of gift giving. Now, you'll have plenty of notice, right? It's rare that these things happen overnight, but it's something you'll keep an eye on over time. And then we did talk about the effects on climate change. These are important, but to some degree, they've already happened. And so, there's some trade-off to be made there, and it's a little bit, there's a lot, frankly, we could talk for another hour about this. I think there needs to be a lot better and more effective ways of mining cryptocurrency if it's going to continue, but that is a long discussion for another day. Let's talk about what it actually means to solicit and accept cryptocurrency as your organization. Shelley asks, or someone asks, why do we move so quickly past the issues about possible illegalities? Because the odds of anything happening that are bad, even there's sort of similar concerns that could be helped with cash. The idea that someone is going to steal a bunch of money and then donate it to your organization is not a very likely outcome. And so it's sort of worth noting as something that's important in the broader crypto space. It's less likely to interact with crypto and philanthropy. So I wouldn't be overly concerned with that, but thank you for that question. Does your organization accept crypto? Only 9% said yes, but you can see that 3 times as many people are saying no, but we're planning to soon. So there's a really big movement here. And what this looks like is that if we have this conversation in a year, we might have a third of nonprofits accepting cryptocurrency. So really interesting to see. 2 ways to handle crypto donations. Currently, when nonprofits receive crypto, they either sell immediately or hold for the long term. We have a very strong recommendation that you do the first one. Either way, the best practice is to include a form to capture donor information before providing what's called the wallet info to make the gift. Wallet info is similar to DTC instructions if you're giving stock. It's just it's sort of the numbers and the address on how to give. So first tip here is definitely sell immediately, right? Crypto is volatile. Most nonprofits do immediately sell crypto donations for cash. This is the least risky way to handle donations. It prevents discrepancies between the amount donated and the actual amount received. And to do this, and this is the best way to actually accept it, you can sign up for a payment processor. There's something called Bitcoin. There's something called Co-Catalyst, which we really like, that will automatically convert crypto into cash for you, right? And so you don't need to do that much work. You don't need to get to a 5 on the level of understanding. You can put one of these on your website, and what will happen is you will get checks in the mail with a note from who it came from, right? So it's a much easier and simpler way. There is some complexity around doing this. It doesn't have to be done by you, and so that's a really important point. Charity Navigator, which many of you know and love, we are big fans of Charity Navigator. You can see on their webpage, they've integrated BitPay. I believe that BitPay takes a 1% transaction fee for liquidating, so it's actually much smaller than a Visa or MasterCard fee for your credit cards. And so these are going to Charity Navigator. You can see on the bottom, it says all of these are processed and cashed out immediately. So they're final, which is an important point. It's very difficult to return Bitcoin. I don't assume that you guys are returning a lot of donations anyway, but this is really valuable. So take a look at this. We'll also send this around generally, but you can go to the Charity Navigator site and take a look at what they do. Really smart work on their part. Some donors and organizations want nonprofits to hold on to crypto gifts instead of cashing out. This is a rare thing, right? So let's be very clear. It may lend legitimacy to the coin. It may help increase awareness of cryptocurrencies. And the hope is that it will yield more significant impact. This is obviously very risky because crypto values are volatile and may result in few or $0 raised. This is not going to happen with small donors, right? What is more likely to happen, and we've seen in a couple of cases, is that people who are creating new coins will give a whole bunch of them to a charity when their value is basically nothing and watch it grow over time. But they don't want the market to be flooded. Basically, a whole bunch of selling at one time will really depress prices. And so this will happen, but it's going to be very rare. Right? The odds that this is going to happen to any single organization on this call are quite low. The odds that it's going to happen to any organization on this call, meaning that one of us is going to have this happen, is quite high. So we wanted to mention it, but it's not very likely to happen in your work. So as an example, Charity Water, which is one of the sort of leading innovators in fundraising, just established at a large Bitcoin conference that they were going to create the Bitcoin Water Trust and not touch it until at least 2025. So they said, donate it now and we'll hold it. And they raised a couple $1 million this way, right? And the term in cryptocurrency is called HODL, which is just sort of a joking reference. It stands for hold on for dear life. So HODL, meaning they'll do it as well. So other options, right? Again, we're sort of thinking about how do we make this as clean and simple and clear for our nonprofits. If a donor wants to give crypto and your organization doesn't have a process for doing so, they can frequently do so through a donor advised fund if they have an account set up already. So you can say, great, we don't actually take that right now, but if you have a donor advised fund, if you do, you can send the Bitcoin to donor advised funds, they'll liquidate it, and then you can send cash out. And it's a very clean way. Almost all of you will have processes for taking gifts from dApps already. So dApps like Fidelity and Vanguard and others accept a range of cryptocurrency, including much beyond Bitcoin as well. So that's really exciting. So what do we actually do now? One is education is really important. So remember, the average confidence level among folks here was 1.7, and your team, and particularly your board members, likely don't feel confident in their knowledge of crypto either. But to fundraise successfully over time, gift officers need at least a basic understanding of crypto, and really not to be scared of it, right? You don't need to know all the intricacies in how the mining happens, but to know it exists and it's a valuable thing, and a lot of people have it. And so doing things like sharing this webinar, we'll also send you a follow-up guide that will help you walk through some of the basics here. And you can share that with any folks in your organization or in your neighborhood who are also in similar roles. Two, having these on your website are really important. So if you are already or plan to accept crypto, make sure it's easy to give on your website. Include on your site, you want to include this on your donate page and your ways to give page. Not everyone knows to look for a ways to give page. So a lot of people go directly to donate pages and then try to figure out how to get Bitcoin from there. One thing that's really important is that the donors who are going to give you crypto are tech savvy, they're young, and they hate phone calls, right? So they're extremely unlikely to call or email a stranger to ask for advice. They'd much rather have a button so they can do it at 11 o'clock at night if they want to. You want to include a form to capture donor info and provide a reason for why you want this information. So many crypto owners like the anonymity of cryptocurrencies. Many also won't know that the gift might come to you anonymously. And so they'll be frustrated when they never hear a thank you, even though you never got their name or email. So simply providing a reason for being not anonymous can help lower anonymity rates. And we'll show you what that looks like in a pretty basic way in a moment. But people are highly motivated by reasons and the word because, even when the reason is fake. So I'm going to share one of my favorite studies now. This is a study happened at Harvard in the late 70s called the copy machine study. Some of you have heard this before. It's by Professor Ellen Langer, 1977. And what they did here, so many of you remember that there used to permanently be lines at office copy machines, right? This was sort of like the place where you stood waiting to make copies because everyone needs to make copies all the time, pre-internet, in offices, and certainly in academic settings. And so what they would do is they would send a test subject, they'd send a grad student to try to cut the line. And that grad student in the first instance would say, excuse me, I have 5 pages, may I use the Xerox machine? And 60% of people said yes, right? It's a very friendly campus. 60% said yes, 40% said no, you can't come in. And then they said, okay, great, let's give them a clear reason. So the grad student would say, excuse me, I have 5 pages, may I use the Xerox machine because I'm in a rush? And 94% of people would then let this person in. But then they said, this fake reason, excuse me, I have 5 pages, may I use the Xerox machine because I need to make copies, which is sort of definitionally why you're at the Xerox machine. And suddenly 93% of folks said yes, almost identical to this really valid reason of being in a rush. This nonsensical reason made just so much progress, right? And so we're sharing this just to tell you how to talk through anonymity with folks. So when we do this, this is a really valid reason, by the way, but you can say things like, will you make the work of our organization easier by letting us know who you are? Anonymous gifts may be less helpful, and we may not be able to provide a tax receipt, right? So when you have crypto buttons, you want to make sure that you have language like this to make sure that people are adding context. And then the last thing to know is that you really want to measure expectations, right? So this is an exciting, interesting thing. I'd like to really clearly remind people that stocks qualified charitable distributions, which are the fastest growing type of philanthropy, donor advised funds, bequests, even cash gifts are going to be a massively larger part of your success in 2021 and over the next 5 years than crypto. And so if you walk away from this and say, oh, this is too much for me, I can never do it, you're probably going to be fine. And so let's make sure that we're putting this in perspective. Crypto gets so much more news coverage than most things compared to how big it is. It's still important, but let's be clear, it's not going to be 50% of your giving at end of year 2021. But you do want to be open to some very large gifts. There will be many $100 million plus crypto gifts in the next 2 years, and they will be from surprising sources, right? You don't know who in your donor base bought a bunch of Bitcoin in 2014. And there's a somewhat divergence between how wealthy people are and how much Bitcoin they own because of so much of that early buying was at pennies on the dollar. And so you may have some really wealthy folks who you would never know it because they're not donors, or they've given $20 a month or whatever it may be. And so you're going to be open to being surprised by some of these donors who may not be giving you 9-figure gifts, but they might be giving you 6- and 7-figure gifts or even 5-figure gifts. And this is going to be really important, right? So you want to make sure you have space and openness to be surprised in a pleasant way and generate a lot of gifts. So a couple of resources for you before we wrap up. First thing is as a reminder, we're going to give away this book, 2030, How It's Shaping the Future. It's a really, really good book and really thoughtful to read to 20 folks. Make a note in the survey if you'd like a copy and tell us where to send it. So that's a thing. Separately, we put together an article, Cryptocurrency 101, What Nonprofits Need to Know About Fundraising This Gifts. It will distill a lot of the clear messages from this session. And so feel free to use that as a tool and resource and pass it along. Just make a little check mark in the survey if you want that as well. And then lastly, let's see, we have a group demo, meaning we'll walk through a bunch of major giving tools that a lot of nonprofits are using. That is this Thursday, I believe, at 1 p.m. Eastern with my colleagues Josephine and Alyssa, who are just phenomenal. So if you're interested in that, make a small note in the survey. And then separately, if you ever want a one-on-one demo of our bequest tools or stock tools or tools around giving out of IRAs, which are being remarkably successful at the moment, just make a note there as well. Okay, so we're gonna pause here. My colleague Simone is gonna drop the survey in the chat. And I'm gonna look at all the questions. I think that we may have more questions in this session than any session we've ever done because it's so new to so many people. And so give me a moment, I'll scan through, figure out which are the really important questions, also that I'm capable of answering because some of these will be beyond my technical knowledge and I'm not gonna pretend otherwise. So we'll go there in a moment. All right, let's dive in here. So there's a lot of questions, and I'm going to do my best on some of these. First, there's a whole, we talked about Bitcoin as being mined. And maybe that's sort of how people commonly talk about it. It's very important to know these things don't come out of the ground, right? And so some of you will have seen pictures of computers in the 60s. And those computers took up whole rooms because there was so much sort of energy and computational power needed, at least in 1960s microchips, to do basic math. You can think about it the same way, that you basically have distributed computers doing super intense math, which is the way that we sort of use the algorithms to come up with new coins. It's so different than literally anything else that exists that if you don't totally get your head around it, that's okay. But the mining is not picks and shovels or bulldozers. It is computational power, deciphering extremely complex algorithms which is where the climate change impact comes in, right? And so the climate change impact, again, isn't because rivers are being polluted with runoff from the silver mines. It's because the amount of energy usage is so intense. And so that is when we talk about the climate change impacts of Bitcoin, it's around energy usage for running the computer power to do these things, right? So hopefully that's a little bit more clear. And obviously what that means is that the energy mix going into the computers is really important. So if you're powering it with wind power or you're powering it with solar power, it has relatively negligible carbon impact. If you're using sort of coal-fired power plants, there's obviously a lot more usage there and a lot more negative impacts on the planet. So hopefully that sheds a little more light. We won't go too deep into the computational methods of creating new coins. And so that's there. Amanda asks, but once Bitcoin is all mined, can't different cryptocurrencies be created? Yes and no. So yes, different cryptocurrencies can be created, but cryptocurrencies don't immediately have value when someone says, I made a new cryptocurrency, right? People have to say that, oh yes, this is something that we believe is going to take off and believe to have value so that they're invested in it. But it's not as though, it's sort of as if you were printing different currencies alongside US dollars in your, with your copy machine in your home office. It doesn't mean you can go out to the world and spend it. So it's a little complex here as we talk about monetary policy, but important to understand. Does FreeWill have any plans to accommodate or facilitate crypto donations? Parentheses, I hope so. Thanks, Jesse. Certainly it's an area of exploration. I mean, right now, we're so deeply focused on QCDs, these gifts out of IRAs that are the fastest growing type of philanthropy, plus stock giving, which is just massively important. Some of you have seen this stat elsewhere, but the gap between organizations that take stock, meaning take appreciated assets as gifts, versus that don't, and how fast they grow, is one of the most important statistics in all of fundraising. It's like 6 times faster on average when people focus on non-cash gifts. And so a big focus there, and obviously on planned giving as well. All right, let's get some other questions. Ryan says, you can use real money, dollars, to buy coins, right? These are digital coins again. Hope the coins that you bought earn value over time and then cash back out in dollars again. Yes, this is right. So this is the investment thesis. The same way that I can take money, I can buy Tesla stock, I can hope that Tesla stock goes up and I can turn it back into more money, right? So it's basically the concept of investing is true here as well. Dave says crypto is not affected by inflation, correct? Yes and no. So if you sort of have static crypto and dollars inflate, it may be that crypto is worth more, but that tends to be true of all donations. It has no sort of particular negative or positive impact on inflation compared to houses or stocks, et cetera. Also, Ryan asks, what about taxes? If you cash out 10 years from now and you've earned $100,000, do you report that to the IRS? Yes, you do, right? The same way that if I sell my house and I get a bunch more money than I bought it for, if I sell a painting, if I sell a stamp collection, et cetera, all of these are subject to capital gains taxes as well. Let's see. So we've talked about specific strategies. There are a lot of questions on there. And so for the most part, what you want to be doing is using these sort of secondary avenues, the BitPay, the co-catalyst, in order to transmit the stock. And therefore, you're just basically sending thank you notes. Some of these places will actually send the tax information directly to the donor as well. So that will be really, really simple. Who sells on behalf of the nonprofit? This is typically some of these tools will. If not, your financial advisor can sell it. So there's that. And then let's do 1 or 2 more questions. There's a really interesting one here. A couple people asked about appraisals. So this is a little wonky. We didn't want to get into it too much here. For donations over $5,000 that are not cash, there are IRS regulations that say you need a qualified appraisal. Now you, the nonprofit, don't, right? So it's not on you. You take it. It is that the donor must seek it out, right? And then it's up to you whether you or the donor pays for that. Stocks have an exemption, right? So if you're a publicly traded stock and I send Charity Water 1 million shares of General Motors, there's a listed price and there's some mechanics for figuring out what the appropriate price is for that day. And then I just get a tax break. I don't need to pay an appraiser for a publicly traded stock. Now, crypto has a lot of elements of publicly traded stock. We know exactly what the price is every day, right? We know on a market, I can look up on Coinbase right now and tell you how much crypto is up to the second. And yet, over $5,000, there's still some thought that you need a qualified appraiser. Now, again, this responsibility is on the donor side and not actually on the nonprofit side. But it's something to keep in mind if you're getting large gifts of this. Okay, we have one question about NFTs. So NFTs are non-fungible tokens. I'd be curious to know how many folks know what these are. They've been in the news a little bit lately, especially in the last 6 months. These are sort of use similar blockchain technology to have a unique digital good. So I can create a unique artwork digitally and say this is, this license it as the only one of its kind, and then I can sell that, and it has a lot more value than sort of one of a million prints. The way to treat NFTs for the most part is like the same way you would treat artwork or cars or other things like that. They're not currency, right? Because one Bitcoin is exactly the same as another Bitcoin. You can trade it and no one cares. NFTs have different value over time. And so while the technology underpinning it has some similarities to cryptocurrency, the mental model we should be using is much more like traditional artwork or other things of value to that degree, as opposed to currency. So great question, different things. So, all right. Given that there's one last question, this is interesting. Given that most people investing in crypto are buying for the long-term investment, I understand the volatility concern, but given the continued growth value over time for Bitcoin and Ethereum, I'm not sure why FreeWill would strongly advise against the holding strategy. This is a good question. And it's generally, obviously it's always up to the nonprofit, right? It is generally our advice to organizations that when you're getting a gift of an appreciated asset, so it could be stock, it could be a bond, it could be Bitcoin, it could be Ethereum, that you don't want to use that to dictate your investment strategy. So for those of you that are larger and have endowments or an investment team, if you're a larger college or a big hospital, you know that you want to actually be proactively making investment choices as opposed to sort of backing into them based on what someone gives you. So it doesn't mean that your investment team should never have Bitcoin, right? Or never have stock or whatever. It does mean that you shouldn't make your investment choices based on what you receive, right? Because you can always sell it, and you can always buy, if you have a bunch of money that's pooled as an investment, you can say, great, I want 10% of that to be in crypto. I want 70% to be in stocks. I want whatever else to be in bonds. And you can do that, but you actually want to make sure you're making active choices around that instead of sort of passively saying, oh, well, now I have Tesla stock and Netflix stock and 2 Bitcoin and a house, a vacation house in Phoenix. And I'm just going to sort of see how they all appreciate, because then you're actually not actively making decisions. And so that's how we would think about it. It's also really important to know that just like anything else, the history of it going up does not guarantee future growth. And so if it did, everyone would buy Bitcoin tomorrow because we all know it's going up by 100. And so there is a lot of ambiguity and uncertainty, even though it's gone up over time. And so, you are welcome to use that as your investment strategy with nonprofit money, but we would caution that, make sure you're really thoughtfully doing that as opposed to sort of happening into it because someone donated. Right? So, all right, that is it. We're going to wrap up there because we know folks have meetings at 1 o'clock Eastern. There was a ton to cover today and a ton of complexity and a lot of really interesting things happening in the world. So I'm really grateful to you all for sticking through it, really pushing yourself. I'm sure you still have some questions, but hopefully this has given you a nice overview to really get started. And we'll look forward to seeing you very soon in, in 2 weeks, maybe even longer, on August 10th. So actually quite a bit. Our next session is about prepping for Giving Tuesday. So this stuff is all coming up faster than we thought. And we'll dive a little bit pretty deeply into not just getting more gifts on Giving Tuesday, but making sure these are really large gifts and how you might want to prepare there. So that'll be really exciting. We'll have a lot of case studies and examples from different nonprofits. We'll have a lot of research from the past few years of Giving Tuesday, and super excited about that. So hopefully we'll see you in a little bit less than a month. And in between, you guys have a wonderful summer. And thanks again for spending some time together.